All right, before we get into the stock market, it's important that you read this slide. This talks about our approach to the markets and what it means when you use our information and the ever important aspect of trade ownership. For your success, it's important you own your own trades, no matter what we or anybody tells you. All right, stock market. Let's talk about what happened here. Well, the stocks did stall short of all-time highs, and they give ground on a surge in interest rates and more. That big, beautiful bill passes. Well, it's a big, beautiful spending bill up front. The savings are supposed to come later, but every single one of these bills that Congress ever passes that's loaded with spending on the front and savings later, well, we never do get those savings, and you can see that by the size of the deficit that just keeps building, and this bill is going to keep building it. Friday, well, President Trump came out and said talks with EU were going nowhere and warned of a 50% tariff for them, possibly coming on June 1st, and the stock market hated that. And when that news came out, it fell very hard. Pre-market, S&Ps were down as much as close to 100 points, but then they rebounded. Here, as I'm doing this late morning video, they're down about 61 points right now. Apple, there was bad news, and then more bad news. OpenAI is buying OI. They will plan on making devices that will be a whole new type of a ecosystem that may actually make handheld devices as we know them obsolete. At least they say that is that possibility. We're yet to see what that exactly means. But competition for Apple is building, and if they come out with any kind of a phone that is competitive, their AI is going to be much better because Apple has done a horrible job on catching up in this AI market. So right now we're still using Siri, which if you ask me is not a great tool. So that was bad news. And then President Trump came out and warned 25% tariffs on iPhones that are not made in the U.S. So all of that had Apple skidding to the downside pretty strongly this week, and then again accelerating on Friday downward. Stock index is down on the week about 3 to 4.5%. Russell is the worst, and that happens because the Russell stocks are the biggest borrowers, and interest rates have been going up. So that's what happened so far in the markets this week. Now let's talk about the stock market. We're going to put up our market condition monitor. This is an amazing application. It has all of our algorithms built into it so that it has an output that is based on multiple time frame momentum conditions. This really gives you a good sense in, you can essentially dial it in for the type of holding period that you have as you engage in the markets, and then it will then tell you the condition based on that. We're starting right now looking at intermediate right here on the MCM, Market Condition Monitor, and we'll take a look at what these readings are right now for the stock market. Intermediate readings, as you see, have they're all slightly bullish. The diamonds, you could see that downward arrow. So that was bullish and now has ticked down to slightly bullish. The other ones were neutral and then had ticked up to slightly bullish. So they're all slightly bullish. And that says that the intermediate term, and the intermediate term for us is holders that are more like position traders. They may be very long swing traders, but they're really more like position traders. And this tells you that the dominant force in the market right now is slightly bullish that we see. Now, let's take a look at the short term. And you can see what's happened in here is for the short term, they've all downgraded here to neutral. And you can see that. So the conditions of the overall strength that comes from the intermediate, now that's dominant, and you add in what the neutral conditions are here in the short term, that's kind of what you get in a little corrective period in the stock market. Usually what happens is that when that goes on, the near term, in other words, if you were a short-term trader, you would look at this. If you're a near-term trader, where you're going to be looking at intraday and you're going to be looking at swing trades for a couple days, then we dial it into near-term, as you can see here. And those you can see are bearish or slightly bearish right there, and telling you that essentially the market is correcting in what is an overall period of upside strength, as you can see that here again on the intermediate. So using that, you get a good sense. Let's just look at the short term in here, and we'll take a look at which of the stocks are top 10 of the stocks that are very bullish, as you can see, and these are the ones that are in the very bullish category. I'll just scroll down a little bit so you can get a sense for that. Which ones are very bullish? You can see that. I like this GDXJ. That's the junior gold miners. They've been very bullish, and silver and soybeans. Those are bullish. So it shows you that the commodity side is doing pretty well. Let's take a look as we switch over to the ones that for the short term are very bearish, and you can see Schlumberger, OKE, ELV, UNH, which we know has led on the downside in here because that company's got problems. So very bearish when you look at that. UMAN is another one that's in that category. Vertex, oil stock, another one in here in CVX. Amgen, another drug stock, as you see there, all in the very bearish category. Wendy's, another drug, ABBV, looking down, and the drug category, XLV, very bearish. So you get an idea in here as the ones that are very bearish. This is an amazing tool, and again, this comes with level 3 and 4. Difference is that level 4, which I'm operating on now, has intraday in there. Level 3 does not. So if you want to get the full version of this, please do take advantage of that special we have in level 4 running right now. Now let's switch over and we'll take a look at the SPY. We're going to focus on the SPY today, and that will give you some idea as to the overall conditions of the market based on our approach of cyclical analysis with a combination of our other tools. If you want to get the full index analysis, that's part of our level 2 membership. So if you're level 2, 3, or 4, you're going to be able to watch Future Speak on Wednesday or get all of our charts that are delivered to our members. And you get that on metals, currencies, foods, energy, crypto. Again, Future Speak, RV does a spectacular job on that every Wednesday. Or you can get our charts, which has the analysis. So many are going to say, well, you didn't do these other indexes or you didn't do VIX. And that's correct. I'm bringing you SPY today, and you can get the information here in our premium memberships. Take a look at the charts that we're going to look at here as we switch over to the SPY chart. So just as we looked at the MCM in 3 different time frames, we're going to do the same thing here in the SPY with the same references essentially to momentum conditions. So the momentum condition, and what we look at here is the reversal scout, and you can see that upward turn right over there. And when we get that, that gives us a message that the cyclical pattern has switched to in the next rising phase, or phases in this case of the harmonics. You can see in here that the dominant harmonic on the weekly is 26 bars, and the minor is 13 bars here on the weekly. So we don't make this up. We just eyeball it, and it tells us, because this is an art form, as to where those rhythms are. And if I go further out, you can see the beautiful cyclicality as you see in here as these rhythms form. As they were moving up and the reversal scout was giving you that bullish look, each time we got into the next rising phase, the reversal scout warned you. As you can see, this was a minor rising upturn right over there. And then when it started to peak, you got this M top that formed, and actually 2 downturns right there in momentum. And then the market moved to the downside. So right now we're in rising momentum. And when you're in that kind of a condition and then the market pulls back, the expectation has to be that the highest probability is going to be more upside yet will follow, especially when it's this early in the rising phase. So that's a good cycle analysis lesson about how the momentum affects it, and also how the configurations and translations work, because you could see that each of these minor cycles were bullish translations, bullish configurations, meaning they peaked on the right side of their cycles. They had higher bottoms and higher peaks, each one of them, until the breakdown under this level, which was the big warning that there was more selling coming. So all of that is full of important messages for us. Now we have these important levels. You had this breakout or repair level at the 78.6%. This 61.8%. Matt actually loves to use this as his warning level that something is changing in the direction. And you can see it got through there and then it gapped up. So that's the weekly analysis. And we're going to keep in mind this is dominant. And if you were a halt position trader, you would say, well, the probabilities are highest that this is going to be just a blip to the downside. And of course, the comments about the tariffs on the Eurozone at 50%, it's just a lot of muscle flexing. And we know that the way this stuff works out, negotiations will continue with them, and it'll be somewhat better than that. Let's take a look now as we switch over to the daily chart. So this, you could see, is the daily, essentially daily chart version of what we just looked at in the weekly chart, and another cycle analysis lesson showing you that when momentum turned negative over here, as you could see, that's the reversal scout and also the slim ribbon. The slim ribbon PO down over here is a reflection of that. So this will turn red when that happens. And then the the option bias study over here, which tells you bias your long positions, bias your positions long here, then switches to bias your positions short here. When it does that, it gives you an orange reading and it says bottom warning when it does that. And certainly that was spot on, as you can see. The cycle was positive here, and then it broke down underneath here. That told you something negative was going on along with these momentum changes. So then this cycle finished much lower than it began. The next rally brought you a failure, and then it broke under that level again. So I'm just going to draw some lines in here for you to see. Once it broke under that cycle low right over there, it was a bearish warning. Once it broke under this cycle right over here, it was a bearish warning. You can see the next cycle, everything turned positive again. So even though I was looking for this cycle right over here to be a test of the lows, the market told us differently. As you could see, the reversal scout turned up right over here. Momentum turned positive. The slim ribbon PO turns green, as you could see here, and then you begin to get bullish configurations in here. And that's what we have right now. So I'm going to break this down again for you in a moment into the 2-hour chart because we're looking at the different time frames. So this is the short-term time frame with momentum being strong, as you see here. As you see here, as this is green, as you see it says, keeps your option positions biased to the long side because it's likely there's going to be an upside resumption. So now when I look at the cycle timing, we're getting into a period in here where this rally, which rolled over, is likely to find some support in these zones right over here. And then sometime over here, which is, let's say, the last week in May to the first week in June, which is late next week or the following week, this corrective period, timing-wise, ends. And then it's likely you get into the next rising phase. When that happens, then these upside resistances will be in play as long as this 78.6% warning level is not broken. If that is broken, the probabilities are lower of it being able to move up to that new high area. Right now, we'll just call that area 564 right there on the warning level. And this level right over here on the downside is 556. If it broke that, it would make the whole configuration negative, and it would say that this rally here on the weekly chart has now a warning that it's going to be over, and new highs will be harder to get to. Right now, this is still positive. It still says that corrective period in here, you may get some chop, and then it's likely that this is going to find its way back up again and test these levels. So this high over here was 596. This fib extension is 597. There's another one over here at 608. And then you get up over here to the all-time high which is 614 approximately, and then there's some other fib extensions up above that could be targets also, but we have to see this formation continue to be positive. So this is all a positive formation and is all suggestive, with the weekly dominant moving up and the daily still in bullish configurations. It tells us the probability is this would be only a correction and then the market moving up again. I'm giving you how we develop our sum of the evidence. Now, if you were a short-term trader and you were looking for how you time your entries, what you do, well, at this point, we saw on the MCM that the conditions for the short term in here, when we looked at the indexes, were basically neutral. So, this is not really a time when it says this is the right entry time for the long side. And you can see in here that it has maybe another week or 5 or 7 trading sessions before you get into this time period where it's likely to resume to the upside. So let's just take a look here, keeping in mind dominant forces pointing up. The short term is still looking bullish on the chart. The momentum readings that we're getting are neutral overall. And now this is a look at the 2-hour chart. And what's fascinating about this is that what I have done here is I've added in information off the daily chart. And you can see in here where the daily chart was negative and we had that break in the cycle and then the rally and then the next break, all of this 2-hour information was extremely valuable. On the bottom here is our market condition monitor, and the market condition monitor was giving you bearish readings all of the time. The total condition of the markets in this multiple time frame indicator were telling you that the likelihood was that it would be moving down. Then, as the market made its bottom in here, the daily momentum turned positive. So here in these areas right over here that I have highlighted, when the momentum turned negative again, that was the risk that it would be a downside resumption. Here, where the market pulls back and then the momentum turned positive again, that tells you upside resumption. This was the bottom of that really mild cyclical correction on the daily chart. This is the period where we were looking for a potential upside turn, and then you could see it just blew out to the upside in here. So here on the MCM on the bottom, when it gets to above the 25 level right over here, it then turns positive, and you see that happen. So now let's look at where we are in this period of rising momentum conditions, what we have in the weekly, and the rising momentum conditions we have in the daily, where we have a roll over here on the 2-hour. Remember, we're looking for the next 5 to 7 days where the market could chop around in here before it does begin to move up again. Here are those support zones off of the daily. Here's that 78.6% warning level. So what we're looking for is this type of a setup in here. In other words, where this downside momentum on the 2-hour stops, where it begins to stabilize, as you see right in here, and then turns upward, as you see happened right over here. So that was the place where the slim ribbon PO on the 2-hour chart turned positive right there. And then you had upward momentum resumption signals that were all really fantastic. You could see how good these were here also. And now what do we have? We have a negative intraday condition or near term that tells you we're in this modest corrective period that is occurring under conditions of positive momentum. That says to me we're going to look for an upside resumption, but that comes right over here as long as this 78.6% level holds, again, at around 564. So as long as we're correcting in here and chopping around, the conditions are such that we would expect a correction to end and then move up again, and we would look for that happening somewhere out over here when this corrective period is over with and we get an upside turn in the momentum conditions in the 2-hour. It's like a domino effect, essentially, as the 2-hour leads and then it turns the daily up, and that gets in alignment with the rising intermediate or weekly patterns. That's how we put together the sum of the evidence and how we can fine-tune our trading. We're going to bring you a lot more of that fine-tuning of trading as we move forward. We have lots of plans around that, so I just wanted to give you a good example of that, how we look at the multiple time frame analysis. Summation is that the intermediate patterns are positive. The short-term patterns that we're looking at are in a modest corrective period that is likely to configure in a way that it will resume to the upside unless we get a breakdown of those key areas. And the 2-hour chart will be giving us some lead information on that, where we go into what would be a resumption of the upside pending, essentially, and then where it actually is active. So that's really the deep look, at the how I and the team look at things in a very deep way, looking at multiple time frame and overall conditions, even though the market is pulling back, are bullish and just in a corrective period right now. This is our level 4 top tier special trial. This is for first time subscribers and upgrades. You're going to get 1 month of askSlim, everything we have, levels 4, 3, 2, and 1, just an amazing amount of content and education that we share with you. And you're going to get that for 1 month non-recurring. You'll get our market condition monitor, which I'll show you in just a couple of minutes. And it has a notification desktop application that lets you dial into the information you want to get notified on, and then it will then let you know. You'll get our multiple time frame charts, our entire focus list of the 84 best symbols. You can import and save those live on your TOS platform, as you can do with our proprietary studies, Slim Ribbon PO, Reversal Scout, MCI, OBI, all of those, and you can learn what they all are right on our website. You're going to get our TOS, that's the Thinkorswim grid archive, with all of our custom chart grids, indicators that's put together by our analytical team. And you're going to get all of our support resources, Q&A with askSlim analysts on Discard, webinars, videos, best practices for utilizing askSlim custom charts and studies. And again, full membership access on everything, levels 4, 3, 2, and 1, $99 for all of that for 1 month, and it's non-recurring. You will not be billed again. You will be sent an email that says, would you like to stay on? And we're going to give you another special deal. So please do sign up for that. You want to get more information, write to Matt at askSlim.com or go to the top of the askSlim.com website, up in the top right. Click that special offer, save 37% on level 4, and it will give you all the information and a link for you to sign up. So that's it. Level 4 top tier special, an amazing offer.